What's going on, guys? My name is Richard Moglen and welcome to another weekly watchlist video. And quickly, before we get into the 14 stocks on my focus list, I do want to give a quick thank you to everybody who left their ideas in the comment section on my last video. It was great to see what kind of stocks you guys are looking at, and let's keep it going. If you have another ticker that you're watching, let me know what it is and also the setup that you plan on using for it down in the comment section below. And of course, while you're at it, go ahead and leave a like on this video. And if you're not yet subscribed to the channel, go ahead and do that as well. And with all that being said, let's head into Marketsmith, which is sponsoring this video, and check out the setups and also the fundamentals of each of these stocks. So starting with Axon Enterprise, we've got a great company, fantastic earnings report last quarter, earnings up 413%, sales up 50%, and the estimates for 2020 and 2021 are both up, with 2020 being up 17% and 2021 being up 20%. The EPS rating is a 96, the Group RS is an A-, which is fantastic, SMR rating is an A, accumulation distribution is a D-, which is a negative, and that overall composite rating is a 97. So overall, pretty decent ratings, and I'm hoping to see it break above this 77.86 level on above average volume. The first wave of strong stocks are already right near all-time highs, and Axon isn't quite there yet, but it is forming a constructive price pattern with these higher lows right here and this nice consolidation. And overall, I really like the kind of long-term base that's in right now. So you can see that really ever since way back in September of 2018, it's been going sideways. So if it can finally break free from that, then I think like Netflix, it can really take off. So that's Axon, and let's head on over now to Autodesk. So overall, let's take a look at the daily chart, and it's got a nice cup right here, building this right-hand side, and it just broke up above this range right here. And taking a look at the earnings and sales, you can see incredible growth right here. The last quarter earnings were up 100%, sales were up 22%, and after-tax margins were up 22.7%. The estimates for 2021 are up 50%, which is incredible, but the revisions are down. The growth in 2022 is also up 39%, but once again, those revisions are down. And taking a look at the EPS rating, it's a 75, Group RS is an A, SMR rating is not available, accumulation distribution rating is a B, composite rating is a 93, and that timeliness rating is an A. So a pretty strong stock. I would like to see it build more of this cup upwards and then kind of form a handle here. But if you want to kind of risk a smaller entry, you could use your stop right above the high of this kind of short-term consolidation here and get in next week. So that's Autodesk. And if you don't know what they do, they develop computer-aided design software applications for engineering and stuff like that. And I've definitely used a bunch of their products. They're very professional and definitely very useful in getting projects done. Next up, we have AAXN, which provides self-service data analytics software for different companies. And overall, their numbers are very strong. Last quarter, earnings were up 100%, sales were up 73%, and after-tax margins were up 28.3%. On the yearly estimates, you can see for 2020, they're actually down, but for 2021, they're expected to rebound and be up 63%. The EPS rating is a 72. The Group RS is an A-, which is great. SMR rating is an A. Accumulation distribution is a B-. That composite rating is a 98. So very good ratings right here, except for that EPS rating. And overall, kind of like Axon, it's forming kind of a longer term base here. So if it can move up this right-hand side, form another handle and really break out, that's the ideal situation. But right now you're kind of getting in at a kind of cheat area right here with this short-term consolidation. And we'll check that out in more detail in TC2000. So next up, we've got CRWD, or CrowdStrike Holdings, which operates as a software company that develops security solutions in the US. And this is pretty far from all-time highs. I do want to preface this stock with that fact. So it's not kind of my usual setup where I'm looking for stocks in long-term uptrends and breaking out into new all-time highs. This is more of an IPO play, and I want to see it break through this 67.56 level, which was this kind of short-term high right here. So overall, the sales growth is fantastic, but it doesn't have earnings yet. So the sales growth is very strong. Last quarter up 89%, and that after-tax margins were down last quarter as well. And it's not expected to be profitable until 2022. And taking a look at its ratings, EPS is only a 52. Group RS, though, is an A. That's great to see. SMR rating is a D. Accumulation distribution is an A. Composite rating is a 95. So overall pretty decent, except, of course, for the lack of earnings. Next up, we've got Freshpet Inc., or FRPT, which manufactures fresh pet food. And overall, the earnings and sales growth has been really, really strong. Earnings last quarter were up 140%, sales up 27%, and that after-tax margin was up 7%. And on this past Friday, you can see it broke out of the trading range just about with the largest volume since the base. And that's something cool with Marketsmith. It's got this little indicator here showing you that this volume is important right here. And it's got a nice cup and handle consolidation, looking a lot actually like Dexcom was before it broke out last week. And overall, the estimates for 2020 are not available, but for 2021, they are up 94%, which is very significant. That's a huge jump. And that EPS rating is a 75, Group RS is an A, SMR rating is a C, accumulation distribution is a C, and that composite rating is a 95. So overall, I really like the chart, and you've got the numbers the past 2 quarters to back that chart up, which I always think is very constructive. Next up, we've got FTNT, which is similar to CrowdStrike. It develops unified threat management systems to provide security and networking functions. And overall, the chart is nice. It looks a lot like Dexcom. Once again, we've got this cup and handle short-term consolidation, and it's right at that pivot. And overall, the numbers are pretty strong. You've got solid earnings and sales growth down here. Last quarter earnings were up 29%, and those after-tax margins are up 21.5%. The annual estimates are kind of slow growing. For 2020, they're only supposed to be up 7%, and for 2021, they're only supposed to be up 17%. But overall, that EPS rating is a 99. Group RS is an A, SMR rating is an A, accumulation distribution is a B-, and that overall composite rating is that perfect 99. So really strong fundamentals right here and a really nice chart pattern. Next up, we've got Go, which owns and operates over 347 discount stores in the US. And it's a recent IPO with really strong numbers. You can see that's actually profitable, which is actually rare for IPOs, and earnings were up 62% last quarter, and sales were up 12%. The annual estimates for 2020 are up 26%, and for 2021, they're up a further 7%. The EPS rating is a 99, which is fantastic. Group RS is a B, SMR rating is a B, accumulation distribution is a C+, and the overall composite rating is a 96. So really strong numbers for Go, and you can see it's kind of in its institutional due diligence phase right here. After its short-term run-up, after its IPO, it's now consolidating, and hopefully institutions are acquiring shares right in here, which is kind of clear because it didn't correct as much as the overall market. You can see that RS line was jumping up right when the overall market was really selling off. So that's a positive for me for this stock, and this will be on my radar going forward. Next up, we've got PLMR, which is an insurance company, and you can see that the numbers are fantastic. Earnings were up 140% last quarter, sales were up 121%, and those after-tax margins are very strong, up 33.1%. The estimates for 2020 are up 28%, and for 2021, they're up 22%, although the revisions are down. That EPS rating is a 99, which is very strong. Group RS is a C, SMR rating is an A, accumulation distribution is a A-, and that composite rating is a 99. So really strong numbers right here, especially like that EPS rating and that accumulation distribution rating. So overall, it's a cup and handle right now, right near the pivot. You had the largest volume since the base on this past Friday, but you can see it kind of broke out a little, but then sunk back down. So I'll be watching for a retest of this pivot right here. And if it advances on above average volume, I'll most likely take up a position. So strong company. It's been on my radar for a while now, and I'll look forward to watching it next week. Next up on the list, we've got PTON, which provides recreational facilities and services for people to use at their homes. And it formed a lot of buzz right here as it was running up after its IPO base. But since then, it was consolidating. It broke down with the overall market, but it's right back up there near all-time highs. And taking a look at the numbers, the sales growth is very, very good, up 77% last quarter, but it's not expected to be profitable within the next 2 years. The EPS rating is a 20, the group RS is a D, SMR rating is a D, but that accumulation distribution is an A. So this is really standing out from its group, and that overall composite rating is a 75. So this could be one to watch. It is an IPO, so keep in mind it will be more volatile, and it's in this kind of turbulent zone right here near its all-time highs. Next up on the list, we've got RNG, which I tried to trade around here, but was stopped out of. But like Zoom, it kind of develops software for firms to hold conference calls, video meetings, that type of thing. It doesn't have the greatest earnings growth here. You can actually see it's negative last quarter, but that sales growth is very, very consistent. And for 2020, the estimates are up 11%. For 2021, they're up 31%. That EPS rating is at 87. That group RS is an A+. That's fantastic. And that SMR rating is an A. Accumulation distribution is a C+. And that overall composite rating is a 99. So pretty good ratings here. And the chart looks strong. It did have a very V-shaped recovery, as with a lot of growth stocks. And I thought it was going to break out right here, but it fell right back into this kind of short-term base, and since then has been building out this handle. So this is one to watch, and I'll be looking to buy it next week. I don't like that the volume was a lot lower last week, actually, and I would like to see if it breaks out really strong volume over 100% volume buzz. Next up on the list, we have SDGR, which is a really cool sounding recent IPO. So what they do is they develop software that helps enable drug discovery. So you can see that in an environment like this, more and more institutions would be looking to invest in companies just like this. And overall, it's got great sales growth, but once again, it's not profitable at this time. That EPS rating is a 19, group RS is an A, accumulation distribution is an A. That's a key fact right here. And that overall composite rating is an 82. So overall, it's really been tightening up on this right-hand side. Had a shakeout here, but a nice recovery. And you can see higher volume on that recovery. And on Friday, actually, it had pretty low volume, kind of like it was doing right here. And you can kind of see this up-down volume here is definitely going to be pretty high. Let's actually go to the weekly chart and take a look at that. So you can see that up-down volume is a 2. That really shows very strong accumulation, which is key because we want to be aligning our trades with bigger institutions and kind of ride those trends. So this is definitely a promising IPO to watch. And if it breaks out on high volume, I'll definitely take up a position. Next up on the list, we've got SLP, which kind of similar to SDGR, develops computer simulation software that allows companies to test different products. So pretty cool. And it's got this nice long-term consolidation. It is a later stage base though, as you can see. And overall, there's not great earnings growth here, but the sales growth is pretty constant. And for 2020, you can see the estimates are up only 2%, but for 2021, they're up 31% from that. And that EPS rating is an 87. Group RS is an A+. That's great to see. SMR rating is an A. Accumulation distribution is a B-, and that composite rating is a 99. So some key facts about this. I do really like this long-term base here. The longer the base, the quicker the move upward from it if it can break out. And it's got this short-term handle right here that I'll be looking to take up a position in if it breaks out towards the upside. So definitely going to be on my radar next week. All right, so the second to last stock is Team, which develops software to allow companies to collaborate online, which as you can see is going to be very popular due to the current environment. And it's got this nice cup and handle right here. It's right at the pivots. And overall, it's kind of in a longer term base, which I like as well. So overall, the growth is pretty good in terms of earnings and sales. Earnings are up 48%, sales up 37%, and after-tax margins are up 23%. For 2020, the estimates are up 27%, and for 2021, a further 25%. That EPS rating is a 99, that group RS is an A, SMR rating is an A, accumulation distribution is B+, and that overall composite rating is a strong 99. And finally, we've got Work or Slack Technologies, which I use myself. Like Team, it basically creates software that allows people to collaborate online. So definitely very useful in this day and age. And it's got very good sales growth, but it's not profitable just yet. And looking quickly at the chart, it's far from its IPO price, but it's kind of basing here. And Marketsmith highlights 2 pivot points right here, 29.97 and 30.47. So I look for a break through those levels on above average volume, that would be my buy point. All right, so after going through the fundamentals, let's quickly go through the technicals and setup that I would use for each of these stocks. So for Axon, as I talked about last week, I want to see a break through this former green line at 76.45 on above average volume. And I like this kind of long-term base it's in after moving up sharply in 2018. So that would be my setup, an increase on above average volume through this green line. For Autodesk, it's similar. It's also right up against a former green line. And after getting knocked down with the overall market, it's pushing up against that area of potential resistance once again. So I would like to see a breakthrough that and strong close above this green line. Next up, looking at AYX, it also has a former green line right here that was actually resistance, but now that it's knocked down with the overall market, it's kind of far from that level. So you could potentially enter right here. If it breaks above this kind of intermediate area of resistance, you can see the gap down here. So there's a lot of potential supply right at this point. So if it breaks through that supply on above average volume, it could really take off and probably challenge this former green line. For CrowdStrike, as I mentioned, it's pretty far from its IPO price, but I've highlighted this intermediate level right here that I'll be watching. So if it breaks through this level on above average volume, that would be the buy signal for me. For FRPT, you can see that we've had a green dot on Thursday and some nice volume coming in on this Friday as it kind of got knocked down, but then reversed and actually closed above its open. So constructive price action right here. And this is actionable for a green dot setup next week. So that would be my entry point if it acts well and moves up on above average volume. Next, we've got FTNT, which also kind of has this big gap down and potential area of supply right here that it's contending with. So I want to see a break through this level on above average volume and ultimately a challenge of those all-time highs. So that's what I'm looking for in FTNT. And moving on to Go, we've got a recent IPO, a green dot signal on this past Friday. And this is one of the rare stocks right now that isn't overextended. And that's actually something that I do want to say. A lot of the stocks right now on my list have 10-4 stochastics above 75. And based on my rules, that means that they are extended and I should be very careful in taking up positions in them. But Go is one of the rare ones that is actually well below that level. So it's at 28.86, while the others are 80s and 90s. So be careful with these. The entries that I'm choosing for these stocks are breakouts. And kind of by definition, a breakout is going to be on a high stochastic value. So that's why I'm able to enter potentially in those stocks. But Go fits that green dot setup, and that's what I look for to use with this stock. So basically, tomorrow, if there's a big increase on above average volume, that would be my entry point. Next, we've got PLMR, which I highlighted last week. It did potentially break through these two areas right here that I was watching, but you can see it got knocked back down. So breakthrough of these levels once again, above average volume, and it closed right near the high of the day. That would be the signal for me to take up an entry. For Peloton, you can see that, as I said, it's right up against all-time highs in this turbulence zone right here. And I want to see a clean green line breakout next week after it moves up and crosses through these levels once again. So that would be a potential entry point for me. And then I would watch that green line to see if it holds. Next, for RNG, you can see that's right in this kind of channel right here, right above this kind of box that it had been forming. So I would like to see it stay in this area, move sideways a little bit more, build out that handle, and then move up through this 252 level with conviction and with volume supporting the move. Next, we've got SDGR, one of the recent IPOs, and you can see it had kind of my ideal setup, a green dot and blue dot occurring on the same bar. But I didn't buy on the next day because it was kind of just a tight day, didn't really move anywhere. But early next week, if this makes a move upwards on above average volume, I'll be looking to take up a position because I think it's a very strong stock. It's got a great story, and it's really, you can see the Bollinger Band squeeze right here. That's what I like to see, and that's kind of the ideal point to buy because if it breaks below this Bollinger Band, you know the setup failed and you can quickly get out. So that's what I'm looking to do with SDGR. With SLP, you can see we talked about the short-term resistance right here at 40.22. And then if it breaks through that on above average volume, I want to see it break through that 41.95 level. For team, you can see it's kind of moving up the right hand side after forming a higher low, and I want to see it break through this 156.12 level on above average volume. And lastly, we've got work, which has been hitting this area of resistance right here a couple times, so I want to see a move through that on above average volume. And it is pretty far from its IPO price and all-time highs, so please be aware that there will be a lot of supply here of people waiting to sell once they get back to break even. So I want to see a move up with conviction, and that would be an entry signal for me. All right, so that pretty much wraps up the video. Thank you guys so much. If you're still watching at this point, I really appreciate you. And please remember to leave a like down below on this video. It really does help me out and my channel. But other than that, thanks so much for watching. Best of luck next week, and I'll see you guys in future videos.